protecting Main Street from Wall Street. It's time for Money Unleashed with Eric Johnson and Kyle Allyn.
You have to have a plan where you know if the market's going to go up, what happens next. And you also have to have a plan where if it doesn't go the way you think, you know what you're going to do.
It's time to put you back in control of your money.
I'm not trying to predict the weather, which is kind of what we're talking about, right? It's predicting the stock market. I'm trying to build a better boat.
This is Money Unleashed with Eric Johnson and Kyle Allyn.
Welcome to the Money Unleashed podcast. I'm Eric Johnson, joined as always by Kyle Allyn. And we are the vice presidents of Hoffman Financial Group. We bring you new episodes every Monday and Friday, so be sure to subscribe wherever you get your podcasts. Let's talk about stocks for a second. We see a lot of people coming in here. They've been in stock positions for a few years now. A lot of the usual suspects on the growth positions that I see with people. But what do we do when the stocks go to the moon, right? What do you do? Everybody knows how to buy stocks. Very few people know when to sell. So what do we do when these stocks go to the moon? What do you think?
Well, I think the key is you got to have a plan. There's so much energy around, I guess I'm just going to call it arrogance.
Sure.
And we've all felt it. Like I'm willing to admit, and I hate telling this story because it's so embarrassing, and I've done so well investing in my life, but I remember the very beginning when I was a stockbroker, saved up a little bit of money, and I decided that I was smarter than the market. I could day trade the market. I had my first $100,000 in my hands, and next thing you know, I've got $30,000.
Oh, yeah.
Right?
Well, every investor runs through that, for sure.
But here's the thing. You go through this period at first where you think you're doing really well, and then you start getting this confidence that your strategy that you've deployed is the right one. And next thing you know, that strategy gets you in trouble. So it makes me think about, I saw this discussion from Jim Cramer all the way back in 1998. So Jim Cramer, right? Everybody knows him, Madman Cramer from CNBC. He gets up and talks about stocks. And he wrote this article about what it felt like to watch this man cooking breakfast. So he'd get up in the morning, he'd ride the train over to New York. I think he lived in New Jersey. And the guy would throw the eggs on the griddle, right? He's frying the eggs. And for anybody that's ever cooked eggs, by the way, Eric's a good cook. We always talk about that here on the show.
I like to eat.
So if Eric's cooking the family some eggs in the morning, the key is you got to know when to take them off the griddle, right? They burn if you don't.
Yeah.
So that's how people feel when it looks to stocks. They're thinking, okay, do I need to take these stocks off? Are they too hot? And of course, when we look at what's been going on, I saw some numbers that said the Standard & Poor's, the S&P 500, hasn't closed below 3% of its all-time high since April.
Yeah, the tariff tantrums.
Right? So we live in this wild world. And then the other one we looked at was, I know we've talked about on the show before, this idea of the degenerate stocks, the Degen Dow. These are some of these stocks. There's about 30 of them. There's these high volatility, the meme stocks, these social media type, Robinhood, Wall Street bets type things.
Yeah.
And they're up 67%. So we live in this world where you don't really know. You don't know if you should sell. You don't know if you should buy. You don't know what's coming next. And so I just would argue, without a plan, you will fail. Now, you may not fail this year, and you may not fail in the first 5 years. But if you don't have a real plan, if you don't have a strategy, I just don't know how you stick around in Wall Street for a long period of time.
Well, let's take a look at Warren Buffett, for instance, right? One of the best investors of all time because he does it the right way. One of the biggest problems I see people when they come in here with these, Degen Dow stocks is they hang in there forever, which can work if you're doing it Warren Buffett's way, but it won't work on these stocks because they go up parabolically and then, what goes up must come down, and they come down parabolically. And, I was always taught by my grandfather, you get rich on the way up, not on the way down, right? And so what Warren does is he picks good stocks that he knows will be around for a long time, over time, and he's never all in and all out. I think this is a pandemic in and of itself. When I see a lot of retail investors come in, Kyle, they kind of have this all in, all out blackjack mentality, which might work at the tables.
Well, it depends on who you are. If you're the casino, it works well.
Listen, if you're the dealer, you're doing great. But, when it comes to stock market strategies and getting in and out of positions and knowing when to sell, you want to be in good companies that have good forward guidance over the next 5 to 10 years. And when they do go up, you want to make sure that you're trimming your positions on the way up. That's a big deal. When we talk about strategy and having a plan for your equities, this is a big one. Like if it's in IRAs and Roths, yes, there's no tax consequence. But oftentimes I see people come in with like non-qualified or individual accounts. They're up like 1,000% or like 300%. And I'm like, okay, do we at least take our initial cost basis out of this thing? No, I haven't. Why on earth not? At least take the money out that you put into this. If you're up 300% in a position, you should be trimming that on the big pops up. And when it goes down again, because they do, right? Like NVIDIA, for instance. I mean, it zooms up and then it goes down 30%. Well, did you take a little bit off the top? Perhaps position yourself to get in at the bottom when it does go down? And not a lot of people do that. That's the type of strategy and planning that Kyle and I are talking about. You have to take your gains, right? And I see a lot of people, the reason why they don't take their gains is because they're worried about capital gains. They're worried about taxes.
Or let's just call it out, they're worried they won't find another hyperbolic successful move.
Yes. Well, that's another thing.
They're like,
too,
this thing's been so good to me, how can I let it go?
You get addicted to the massive growth that you receive in a short period of time. And basically what it comes down to, everybody out there, is that you can't time the market. You need time in it. That's the difference. Everybody wants to put $5 into Bitcoin and all of a sudden it comes out and you got $50 million. That's not how the game is played. You need to constantly be doing the proper things over and over again, and that's trimming as your positions go up and then buying as they go back down. And you need to have good companies in order to do that. Now, listen, if you're day trading one of these, degen stocks that Kyle was mentioning, I think Tesla was in there and AMC and, GameStop, all the usual suspects that everyone likes to, rifle up 120% that goes back down. That's fine, but you got to be able to pull your chips off the table when they go up, because if you ride it back down again, then you're stuck. And if you're trying to go long on these types of positions, I think it's a mistake, because you're not in these types of positions because you're worried about taxes. You're just trying to make the money. So go ahead and rip the money out, be prepared to pay the taxes, and go do it again. When I talk to people about this, it usually blows their mind, Kyle, because I'm like, you need to lean into the taxes. Taxes are a privilege. And I know people kind of laugh at me when I say that, but it's not a punishment, right? I think it would be better if we understood that the taxes were actually going towards something for us, right? They'd feel better about it. But you got to pay your partner. And that's part of the strategy that we talk about. What are some of the strategies that you talk about with people when you come in and you see these positions and they're up astronomical numbers?
Yeah, look, I think the biggest thing here is you need to work with an expert. I was watching this Instagram reel this morning, and it was this Michelin star chef. So I'm going to take you back to the eggs analogy.
Okay, back to eggs.
All right, back to eggs. Because I'm from South Georgia, and we just got to keep it simple sometimes,
Just
right?
don't burn them.
So I was watching this, and the gentleman said, I don't know if you've seen this, but the gentleman said that one of the greatest and easiest ways to make an omelet is to take 2 eggs, put it in a coffee cup, put some mayonnaise in it, a little olive oil, and scramble it together, and just put it in the microwave for 2 minutes, and then you can basically roll it together with some cheese. And as I was watching this, I was thinking, well, that blew my mind. Like, I would not think that a Michelin star chef who's doing such complicated things would tell me the easiest way to make an omelet is in the microwave.
Yeah, I would not suggest that. Maybe I should. I don't know.
And I watched him do it, and I was like, that looks really good. And he wasn't joking. He wasn't playing. He was like, the chemical makeup of da-da-da-da-da, the way the eggs work, the way the microwave works, the way the mayonnaise works. The mayonnaise has certain things in it. Technically, you're creating exactly what you need. And so my point is, when you're working with somebody who is really good at this, they're going to bring strategies to you that you've never even thought of.
Right.
Or they're going to show you something so simple, you're going to giggle and be like, I knew that was probably how to do it. And so the reason you find an advisor, the reason you want to work with a fiduciary, the reason the Hoffman Financial Group exists is because we have done this so many times. We've seen ups, we've seen downs. We've looked at the taxes, we've looked at the Social Security, we've looked at all these different elements. And we're in a room constantly where people are bringing us a curveball. I had a guy come in the other day and he said, all right, I've got some company stock. And because of my company stock, isn't there a little bit of a caveat where I can move this money out of the IRA and pay better tax structure? I go, absolutely. I see this once every 5 years.
Yeah.
So these strategies can be really simple or they can be really rare. They can be really complicated or they can be right there in front of you. And so to say what the one strategy is, I can't. All I can tell you is that as the artist, as the chef, as the expert, we've seen these things. And so when you come in and you lay out in front of us your scenario, it's extremely likely that we can find answers, angles, and these little cheat codes to allow you to get through what feels really complicated, but to us is just another Tuesday.
Yeah, and that's why it's so important to have a fiduciary advisor help you do this. I mean, like, people can manage their own accounts, and that's all fine and good, but they hit a level of wealth, and they're like, what do I do next, right? Because if you're doing this on your own and you lose 10%, it's really hard to stare at yourself when you're shaving every morning, right? So you need to have somebody help you out with this. You need to have somebody have your back. And you need to have these strategies put into place, especially if you're getting closer to retirement, because, guys, the older you get, you can't be, I mean, you could be if you wanted to, but you shouldn't be all in equities, right? Especially if you think the market's overheated right now. You don't have the time to make it back if it goes the wrong direction. So that's why it's super important to sit down with an investment advisory firm. We're one of the good ones in Atlanta. We're all fiduciaries here, and we help people like you every single day make these tough decisions with your equities. Give us a call. We're happy to get you on the calendar and help you out with these strategies. 404-640-5511. That's 404-640-5511. Or you can find us online at unleashyourmoney.com.
Eric Johnson and Kyle Allyn are investment advisor representatives of Brookstone Wealth Advisors, LLC, a registered investment advisor and affiliate of Brookstone Capital Management, LLC. BWA and Hoffman Financial Group are affiliated under common ownership. Registered investment advisors and investment advisor representatives act as fiduciaries for all of our investment management clients. We have an obligation to act in the best interest of our clients and to make full disclosures of any conflicts of interest. Please refer to our firm brochure, the ADV 2A, page 4, for additional information. The Hoffman Financial Group and WSB are not affiliated. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. This information should not be considered tax or legal advice. Individuals should consult with a professional specializing in the field of tax, legal, accounting, or investments regarding the applicability of this information for their situation. Any client experiences discussed during the show are unique to that client. They are not meant to imply or suggest you will experience the same results. Past performance is not a guarantee of future results. Investments will fluctuate and when redeemed may be worth more or less than when originally invested. Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone. Index or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract. Please refer to our firm brochure, the ADV 2A, Item 4, for additional information. Hoffman Financial Group is not affiliated with or endorsed by the Social Security Administration or any other government agency. Insurance licensed in Georgia, number 163546.